Video 2 for Monday the 12th of August. Right, looking at gold here. Gold's had a great run recently, but just to look at the weekly chart, put it all into perspective. We had this period for years where we just pretty much headed sideways. Obviously, the down move slowed as we went through to 2013 to the low in well, actually the low was, yeah, right at the end of 2015. And then the recovery was painful. Really just a sideways direction, as you can see. So, I mean, really, when you look at it, it was a complete sideways direction from the middle of 2013, just with this little dip lower, which was then, which we recovered from fairly quickly, and then this dip down to 1122, which was around the same, yeah, not much lower than these troughs. Anyway, I'm waffling. Right. Clearly, the break above the trend line, which went back to 2014, was our buy signal. Not only was it a break above the 5-year trend line, but it was also a break above the 100-week moving average. So it was pretty significant. And I think it's fair to say that we were jumping onto long positions on the break above there. That's obviously worked rather nicely. Let me just check when that was. Yeah, that was the end of June. Looking at the daily chart, and as you can see, we came back to just almost retest that area. It was around the mid $13 area, and we just dipped down to 13.80. Again, this was a confusing period when we should have been rocketing, but we traded sideways. So we had the initial break, but it wasn't a huge break. We went from 13.50 up to 14.38. So it was a near 90-point rally, followed by a longer period than I expected of sideways consolidation. Anyway, we've now broken higher, but we could be entering another sideways period. As you can see from these sort of doji patterns on these candlesticks, I wouldn't be surprised to see some more sideways action. Maybe a little dip down to 1450. What's this peak here? 1440. So 1450, 1440 would be a good support level if we were to fall that far. I think the bulls will remain in control of this market, but we are a little bit overbought in the short term. I definitely would not suggest a short position. That's just too risky in such a strong bull trend. But I do favour a sideways to maybe slightly lower pattern in the days, weeks ahead, which would any dip to this area of congestion would be a buying opportunity, I think. You can see from the silver chart that on the monthly chart, let's go to the weekly chart. The monthly chart, as you can see, we were very much trading sideways, so let's go to the weekly chart. Silver's got a fair bit of catching up to do with gold. The initial break above the trend line going back to September 2017, so almost 2 years, and the 100-week moving average, the blue line, around 15, where was that now? Around 1570, 1580. That was our first bullish buy signal. And actually, I was quite surprised to see such a big retracement. We came all the way back to 1588. So if you weren't long, that certainly gave you an opportunity to get long. Now, we kind of hovered around the 200-week moving average, but very clearly we pushed a long way ahead now. So this on the weekly chart looks quite positive. We've obviously got a little bit of resistance from these peaks up at 1730, 1735. Where have we been to? 1723. And we pulled back a little bit from there. So whilst this may offer bulls a reason to take some profit, I don't really see it as a big shorting opportunity. I do think we want to be buying silver on any dips. Pretty much the same strategy as gold. Nothing too negative, no sell signal, but again, indications that the market may trade sideways, maybe a little bit lower, but as I say, we're looking for buying opportunities. Some obvious support around the 1660, 65 area. If we go any lower, then I'll certainly update you, but I would be looking to buy on weakness. WTI crude, this chart is a bit of a mess. Well, I say a mess, we do actually have a pattern to trade, but not a very easy one, and I'll show you why. This is what I see really as the pattern to trade, this triangle. Okay, there we go. That's full on the screen. So you see we've got the lower trend line here. We just held above it. We actually held the previous low from June, which was 50.60, and we got to 50.52. So a nice bounce off there. The upper trend line coming in here, matching the 100-day moving average actually right now, but by the time we get there, they will have drifted apart by a little bit more. Those really are the areas to watch. Now, 200-day moving average is having some sort of effect. Certainly, you can see how well it held support there. Less so recently. So I don't know how important that will be on the way back up. In between, it really is quite messy. That's all I can say. So I personally would only be looking to trade up around this trend line, which is sort of around $58.50, $59, and then obviously around 50.5 down to 50.20. Anywhere in between is a bit messy. I will obviously update daily with minor levels in between for scalpers. Onto the US stock markets, they've obviously been a lot more fun lately. We have seen a good sell-off in the S&P. Now, you'll know this already if you're an S&P subscriber, but I was talking about this big trend line here, which was going to be the main problem for bulls in the summer. And we topped exactly there. I had 30, 30, 30, 40 as the resistance level. We got to 30.29.50. We got to within half a point of that big resistance area. And if my subscribers or Twitter followers got short there, it certainly worked. Now, I didn't expect this huge plunge. I certainly did not know that Trump was going to come out with the increased trade tariffs. We sold off a little bit when the Fed cut rates and indicated that it wouldn't be the start of a big cutting cycle. And then we started breaking some support levels, and obviously we broke down. Now, I don't really know why we bounced from here, if I'm honest, either. 200-day moving average was obviously a factor. I really did not expect this market to recover and actually beat the high that we had put in, beat the level that we were at when Trump announced the tariff. So we actually recovered further, a hell of a bounce. That obviously looks pretty good on a weekly chart with this very long upper wick and then a tiny little red body, because we really closed down very little on the week, all things considered. Right, where does it leave us now? So we could be forming a head and shoulders pattern. Now, we're way off this, and I'm not suggesting you get short at this stage, but I suggest you watch it. This could be a left shoulder, this could be a rounding head with a small double top at that very important trend line. So let's see what happens in the months ahead. Now, or not even months, weeks ahead, if this was to turn out to be a shoulder that formed throughout August and we kind of held around 29.60 is the peak there, so we want to hold around that level. If we were to form some sort of rounding top there and then turn down, and then in September maybe break the neckline, which actually that is not the neckline. 1 second, I need to redraw that. No, trend line. I'll leave that trend line on, but the neckline, assuming this is a head and shoulders pattern, would come in somewhere around 2800. That would be the level to watch. So let's see if that pattern forms. Obviously, we're going to have to wait weeks. It has to be, doesn't have to be symmetrical, but something in line. If it was just to turn around now and drop, I wouldn't really call this head and shoulders. It has to do something relatively similar to the left side. Again, not symmetrical. Even if it just lasted 3 weeks or 4 weeks, that would be fine. It doesn't have to last 2 months. Anyway, we'll update you on that one in the future. Even the S&P, no, not even the S&P, the Nasdaq was a little bit more confusing as far as upper trend lines go. You can see we spiked above it on the weekly chart and then reversed back below. On the daily chart, again, we could potentially have a head and shoulders pattern, but we'll have to wait for at least a couple of 2 or 3 weeks to find out if that pattern holds, maybe a month, to see if we do get some sort of rounding head and shoulders pattern there. One to watch. And no prizes for guessing that the Dow Jones could also be forming a head and shoulders pattern, similar pattern. So let's just see what happens with these. Just a quick check of the weekly chart if it shows me any further information. Not really. But didn't we hold the 100-week moving average support line perfectly? Because I post daily videos of my technical analysis and trade ideas, I'm asked every week which platform I use. So I use Metastock. I've used this for as many years as I can remember. I've tried so many different platforms, but this is by far the best. The main reason is because the quality of the data is just excellent. That's obviously the most important thing for a technical analyst. You've got to have quality data. The other thing is I can have as many windows open as I want, so that I can look at multiple time frames all at the same time. This is absolutely critical for me. It allows me to see all the different levels in all the different time frames, so I can see which line up. and which would be the best levels to trade. So I've squashed this onto one screen. I usually have this spread out over 2 or 3 screens, but I can't record them all at the same time. So this is why I've shown you this. Now I'm going to just widen it out so you can sort of see what my main screen looks like. So I'll have 3 time frames on my main screen. So I've got the weekly, which I can quickly switch to the monthly, which I'll do maybe once a week, once every 2 weeks, just to keep an eye on whatever levels might be important to me there. And then I've got the daily chart and the hourly chart, and on my other screen I've got the 4-hour chart. So I can very quickly look at all the different time frames, and I can compare them, and then I can blow up. I can sort of expand one screen if I want to. So for example, if I'm trading very short term throughout the day and I want to have a look at the 4-hour chart, then I can quickly do that. Now, one of the other most important things that I can show you is on other platforms I've used, you put in a trend line and then you change the time period, and the trend line jumps all over the place and it's not relevant. You have to keep redrawing your trend lines. This is just frustrating and a waste of time. With Metastock, that doesn't happen. You can quickly switch time frames, as I've just done. I'm now on the 30-minute, and as you can see, the trend line is absolutely bang on accurate still. So this is another big plus. If I go to 10 minutes, once this loads, you'll see that the trend line again is absolutely bang on the data. So it's just simple to use. It's very straightforward. The data is very accurate. The trend lines and all the tools are very accurate. I know that when I pick a level, I can absolutely. I do believe that. Well, my subscribers tell me that it's amazing how I manage to pick pinpoint levels, and really, it's all down to this system that allows me to do that. So it's worth paying a little bit of money out to get the right data. You're going to make that back within one trade. Do yourself a favor, go to the metastock.com page, which gives you all the information you need. This system can scan markets with your criteria to find trades for you. You can backtest with it. It's really quite incredible. Go to the Metastock homepage, click on what is Metastock, and it'll take you to this page, and you can watch the video about it. All the information is there. When you're ready for a 1-week free trial, just go to metastock.com/daytrade ideas. You won't regret it.